Hi students, I hope you are safe and healthy with your family and friends. Today we are going to discuss in detail about cost accounting, 4 important terms of cost accounting. What are they? Cost, costing, cost accounting and cost accountancy. Let's see one by one in detail. Let's take cost. What is meant by cost? What is the definition of cost? The amount of money spent required to produce a product or provide services. I will explain you with a suitable example. If you run a bakery business, okay, what are the items you need to run a bakery business? We need the items such as bread, biscuit, okay, biscuit, chocolate, cake, sweet and snacks. Okay, these and all items we to run a bakery. We need to run these and all items we need to run a bakery business. Okay, so if you these items, how can you get these items? We required amount of money. We require to spend the amount of money to produce the product or provide services. That is called cost. Okay, let's come to costing. What is meant by costing? To the process of finding the cost of a product or services or calculating process. Okay, I will explain you with a suitable example. Say for example, if you run a bakery business already, if you are running the bakery business, what are the items required to run a bakery business? Cakes, chocolate, biscuit, breads, sweet and snacks, right? So if, this and all we called as we required raw material. To prepare this product we need a raw material, right? What are the raw material we required? Flour, sugar, cocoa powder and baking powder, right? And added the flavoring, colors, okay. And to produce to prepare the cake, to make the cake or biscuit, chocolates, we need a labor. Okay, so the raw material collectively called as what? That the flour, sugar, cocoa powder and baking powder, okay, and added the flavors. Okay, these and all collectively called as what? Raw material to prepare the cake, sweet, chocolate and breads. Okay, so this and all we collectively called as what? Raw material. The raw material cost we need at least 500 rupees. We prepare this product, we prepare this cake, chocolate, sweets and snacks. We need a labor. So approximately the labor charge at least 300 rupees we fixes. Okay, then approximately I said, then we need a place to run the bakery business, right? So that it requires a rental place. We need a transport. We need a electricity to heating, melting, molding, and freezing. Okay, for these processes we need a electricity, water, rent, transportation. These are all calculated called as overhead or other expenses or indirect expenses, direct expenses. The cost of the other expenses is 200 rupees. Okay, so what is the total cost of the production? Raw material 500 rupees and labor cost 300 rupees and other expenses 200 rupees. The total cost of the production is 1000 rupees, right? So listen, the process of finding the cost of the production, the process of calculation, raw material 300 rupees, raw material cost, labor cost 500 rupees, overhead 200 rupees, total cost of the production 1000 rupees. So the process of a calculation, that is called costing. Got it? Let's come to next one, cost accounting. What is meant by cost accounting? Branch of accounting that deals with the cost control. So the cost accounting is nothing but, say for example, it is a recording, classifying, analyzing and control the cost. Listen, I will explain you with example. Suppose last month the cost is production cost is 1000 rupees. Okay, what this month it becomes 1100 rupees. Why it is increases? because of the say for a suitable example, petrol charges increases, petrol cost increases, it reflects all the products. Okay, maybe labor charge cost increases. Okay, so why the cost is increases, that is analyzes a recording, classifying means what, raw material cost, labor cost, overhead cost, other expenses cost, classifying, analyzing means what, why cost, production cost is increases because of maybe petrol charge increases, it reflects all the charges, why labor cost increases, that is called analyzing plays a major role in cost accounting, that is called cost accounting. Let's come to cost accountancy. What is meant by cost accountancy? Using costing and cost accounting information for management decisions. I will explain you with a suitable example. If the notebook, last month notebook cost is 50 rupees. This month it becomes increases. This month it becomes 60 rupees. So 10 rupees increases. Why it is increases, what the companies do, the management make the necessary steps to reduce the cost. How the management reduce the cost? It buys cheaper product, cheaper raw material. The management increases the selling price. So in this way, with the help of costing and cost accounting data, the management take necessary important business decision, that is called cost accountancy. Okay, so through this, the process of we discuss in detail about the process of cost accounting. Okay, so the cost accounting means what? Recording, classifying, analyzing, control the cost, and making the decisions, that is called cost accounting. Say for example, definition of cost accounting is what? Say for example, if you take a bakery, records material cost 500, labor cost 300, and overhead cost 200. Total cost of the production is what? 1000 rupees. Then from this cost data, management fixes the selling price of the piece of cake, or management fixes the selling price of the chocolate, biscuits, sweets, snacks, etc. So that is called cost accounting. Okay. So then core concept. What is the core concept? The core concept is reduce the product, reduce the cost. What is the core concept? Systematically cost accounting, systematically recording and analyzing all the cost. Say for example, a company separately records the material cost, labor cost, and overhead cost. Why? Because with this helps to identify where more cost is spent, that is called core concept. Then primary goal. What is the primary goal? The main goal is to find out, to know the cost of the production, to know the production cost and cost reduction. Okay, and improve the production efficiency. That is the main goal. What is the main goal? Three important main goal. What is that? To know cost of the production and reduction of the cost. And third one is improve the production efficiency. That is called the primary goal for the cost accounting. Okay, let's come to nature of the cost accounting. Then we have 5 important nature of the cost accounting. Let's see one by one. Let's take analytical nature. Cost accounting has analytical in nature. Cost accounting divides total cost into the different part. Say for example, a company records material cost 500 rupees, labor cost 300 rupees, overhead cost 200 rupees, total cost of the production per unit is 1000 rupees. So the analytical in nature means cost accounting divide total cost into different part. Okay, let's come to control oriented. What is meant by control oriented? Company cost accounting controls, just a minute, it helps to control unnecessary expenses. Okay, so unnecessary, using the unnecessary expenses, production department controls the avoid the unnecessary expenses. Why it avoid the unnecessary expenses? Take budgeted cost and standard cost. So say for example, the company standard electricity expenses is 500 rupees. So the standard cost of the electricity expenses is 500 rupees, 5,000 rupees. But the actual cost of the electricity expenses is 7,000 rupees. So the management makes the cost increases. Actually the electricity cost is increases, right? So the management takes necessary steps to reduce the cost of the electricity. Okay, how it be reduced? It take the necessary steps to switch off the machines when it is not using, and using the energy saving light and using the energy saving machines. In this way, the production department controls the cost. That is called cost oriented. Then future oriented. What is meant by future oriented? Cost accounting helps you using the past data to plan the future and forecasting. Say for example, last year's production cost is 1,000 rupees. This year it is estimated 1,100 rupees. That is called future oriented. Let's come to internal focus. What is meant by internal focus? Cost accounting prepares the cost reports only for manufacturing inside the management only, not for the outsiders. The factory managers prepare the cost report for improving production efficiency. Okay, say for example, a shoe manufacturing factory, yeah, or a shoe factory manager studies the cost report and find out two important things. So what are the first thing is workers are waiting for leather material, and the second important thing is machines idle time is too high. So the shoe manufacturing factory manager immediately decides and provide proper training to the workers and maintaining the machines regularly. As a result, what happens as a result? Production cost decreases, right? And profit increases. Okay, that is called, so that cost report only used for inside the factory, inside the company only, not for outside. Then come to decision making tools. The cost accounting helps the management to make the important business decisions. I will explain you with the example. Management has to take two decisions. One is manufacturing a product inside the factory, or it buys the product from outside. Okay, I will explain you with a suitable example. A mobile phone, a mobile phone company requires 1,000 batteries. Okay, the management has two options. What are the first option is to the that 1,000 batteries manufacturing inside. Okay, so what are the cost? It is estimated? Material cost 50,000 rupees, and the labor cost 20,000 rupees, and the machine cost 10,000 rupees. Okay, totally material cost is 40,000 rupees, labor cost 20,000 rupees, and machine cost 10,000 rupees. The total cost of the manufacturing 1,000 battery is how much? 70,000 rupees. Okay, it goes for another option. The second option is 1,000 batteries buy from outside. The outside, when it 1,000 batteries buys from outside, it cost is 60,000 rupees. So the company decided, since 1000 batteries buys from outside is less. Okay, so immediately management make the decisions to purchases 1000 batteries from outside suppliers at rupees 60,000 rupees instead of manufacturing them in inside. Okay, so the costing and cost accounting help the management to make the important business decisions, that is called decision making tools. Okay, so these 5 important nature of the cost accounting is completed. Let's go to scope of the cost accounting. Let's come to the cost ascertainment. What is meant by cost ascertainment? Cost accounting find out the exact cost. Cost accounting always helps to find out the exact cost. Why? How I will explain you with a suitable example. Listen, the cost of the production is 10,000 rupees per unit. Yeah, say for example, take a bakery business. Okay, in a bakery, the cost of the production per unit is 10,000 rupees. It runs 100 units. What is the cost per unit? So you can calculate to find out the cost per unit. We have the formula to find out the cost per unit. What is that? Total cost divided by input unit. Okay, the total cost is 10,000 rupees. The input unit is 100 units. After you will divide it, you will get the cost per unit is 100 rupees. So the cost accounting helps to find out the exact cost. Okay, that is called cost ascertainment. Let's come to cost control. Okay, so how can you control the cost? Say for example, always keeping the expenses, the cost accounting always keeping the expenses within the limits. Okay, so listen, wastages reduces the wastage of electricity and water charges. Okay, I will explain you with a suitable example. A textile company noticed that electricity charges electricity bill is too high and the water charges is too high. Okay, so immediately the management takes the necessary steps to reduce the electricity charges and the water charges. How can it happen? It switch off the machines when it is not in using, and instead of that it uses the energy saving light. Instead of that it uses energy saving machines. Okay, then it repairs the leakage of the pipes. In this way, as a result, what happened in this way, the cost of the production decreases, the electricity bill is reduced and the water bill is reduced and the profit increases. Okay, so that is called cost control. Let's come to budgeting. So budgeting means planning the income and the expenditure. Okay, of the company. I will explain you with a suitable example. A company fixes, a company records material cost 50,000 rupees, labor cost 20,000 rupees. Labor cost is, let's take, say for example, material cost 50,000 rupees, labor cost 30,000 rupees, and the overheads how much? Let's say for example 10,000 rupees. The total cost of the production is 90,000 rupees. Okay, so then it fixes the it added the profit 20%. How much? How to calculate the profit 20% from total cost of the production. Total cost of the production is 90,000 rupees. 20% profit will added it is the profit is 18,000 rupees. Then from this cost data, using this cost data, the management fixed the selling price 1,08,000 rupees. Okay, so in this way, so this is the planning income and the expenditure. Okay, why it is called as budgeting? Okay, a company prepares the budget by estimating the income and the expenditure compared with the previous year's data, cost data, or at least the previous 3 months cost data to prepare the income and the estimated the income and the expenditure and plan the income and the expenditure. That is called budgeting. Okay, let's come to variance analysis. Okay, so variance, what is meant by variance analysis? Cost accounting, the difference between the standard cost and actual cost, that is called variance. Okay, say for example, a company fixes the electricity charge, electricity cost is 5,000 rupees, standard price, and the actual cost, standard cost. Okay, and the actual cost of the electricity expenses is 7,000 rupees. What is the difference between standard cost and the actual cost? 2,000 rupees. That difference, 2,000 rupees, is called as variance analysis. Okay, so from this these are the four important scope of the cost accounting. Let's come to principles of cost accounting. Principles of cost accounting, we have 5 points. Okay, 5 important principles of the cost accounting. Let's see one by one. The first one is consistency. What is meant by consistency? A company should the company follows same accounting methods. The company always follow the same accounting methods for every year. Then only it compares properly. It is very easily. I will explain it with a suitable example. The company the company should follow same method of accounting. Let's take to calculating the depreciation of machinery for every year. It will be very easy to properly it can be very easily to compare for previous year and current year and future year accounts. Okay, I will explain you with a suitable example. A company purchases machinery for 1 lakh rupees. Its estimated life is 5 years. Okay, then management decided to follow straight line method. Okay, for every year. So what is the straight line method? For how to calculate the straight line method for depreciation of the machinery? That is total cost divided by purchases cost, or total cost of the machine divided by estimated life. The total cost of the machinery is 1 lakh rupees. Estimated life is 5 years. Then it will be divided. After divided, you get 20,000 rupees. Okay. So every year you have to record 20,000 rupees as the depreciation of the machinery. 2024 depreciation of the machinery is 20,000 rupees. 2025 depreciation of the machinery is 20,000 rupees. The 2026 depreciation of the machinery is 20,000 rupees. So what is the reason? A company follows the same method of calculation, same method of accounting only. It can be easily properly compare with all the years. So every year the company follow the same method of accounting system, that is called consistency. Let's come to matching principles. So cost accounting helps the cost should be calculated with the matching principles. Say for example, let's take the textile manufacturing company. Matching principles means cost should be, listen. So matching cost should be matched with the revenue earned in the same period. Cost means expenses. The expenses should be matched with the revenue for the same accounting period. Underline same accounting period. I will explain you with a suitable example. Let's take the textile manufacturing company. Okay, so it's textile manufacturing company paid salary 50,000 rupees on March month. Noted. Okay, so according to matching principle, the cost that the expenses of the March month is what? 50,000 rupees. Salary paid is the expenses. So March month the expenses is 50,000 rupees. Okay, then we have to take the matching with the cost should be matches with the selling price. Okay, sales revenue. So March month sales revenue earned for the textile manufacturing company is 2 lakh rupees. Okay, so according to the matching principles, the sales revenue is 2 lakh rupees, salary paid is 50,000 rupees. We have to subtract salary paid 50,000 rupees from sales revenue 2 lakh rupees. You will get 1,50,000 rupees. Okay, so the profit for the March month is 1,50,000 rupees. So the company following the matching principles in this way. Okay, the cost should be matching with the sales revenue. Okay, so it is right. It will be correct. Okay, correct profit. Then prudence. So prudence means what? Listen, expected losses should be recorded. Uncertain profit should not be stated. Okay, understated. Okay, so what is meant by prudence? All the expected loss should be recorded. Uncertain profit should not be understated. I will explain with a suitable example. A company records 5,000 rupees as the bad debts. Okay, bad debts means what? Loss. It has a possible loss. Okay, I will explain you with a clear example. A company sold goods 50,000 rupees on credit to its customer. Later, the company feels 5,000 rupees cannot be collected from its customer. Immediately, the company records 5,000 rupees bad debts even before actual loss occurs. Even before actual loss happens, the company records 5,000 rupees bad debts. Okay, so listen. So selling sold goods of 50,000 rupees on credit basis to its customer. Enter recorded. Okay, bad debts 5,000 rupees recorded. Okay, even before the actual loss happens. Okay, then cash receivable 45,000 rupees recorded. So from this following this prudence principle, what it says, the prudence principle says, record the unexpected losses yearly. Okay, that is called prudent principle. Then come to objectivity. What is meant by objectivity? Objectivity means all the companies or businesses should record all the transactions in actual fact or evidence. Not enter the transactions for your personal opinion. I will explain you with the example. A company records purchases material 5,000 rupees in purchases with the evidence of invoice bill. Okay, not recorded his own opinion. Cost accountant accountant own opinion cannot be recorded. All the transactions should be recorded in fact or evidence. Okay, that is called objectivity. Then come to materiality. What is meant by materiality? Important cost should be received more attention. What is meant by materiality? Important cost should be received more attention than tiny cost. Okay, I will explain you clearly with a suitable example. A company purchases a machine at the cost of 5 lakh rupees on 8th March 2024. Okay, on the same day, a company purchases 5 rupees pen. Okay, so what it gives the more attention? Which cost gives more attention? Important cost should give the more attention. What is the materiality means? Important cost receives the more attention. So on 8th March 2024, company purchases a 5 lakh rupees material. On the same date, 8th March 2024, the company purchases 5 rupees pen. Which cost gives more attention? Which is the important cost? That 5 lakh rupees machine purchases is the very important. So the company very carefully records machines purchases 5 lakh rupees. It may be ignored to record 5 rupees a pen in the record accounts record. Okay, so what is meant by materiality? The important cost should be receives more attention. So material purchase, a machine purchases 5 lakh rupees is the more important. It receives the more attention. It actually it records very carefully. It affects the production. If you ignore to record the cost of the purchases of the machines 5 lakh rupees, it affects the production, it affects the expenses. That pen 5 rupees on the same date you purchase as a 5 rupees pen is not, it's not affect any production, any expenses. It's a tiny expenses, it's a tiny cost. So the important cost should be recorded, receives more attention than tiny or small cost. So 5 rupees pen is the small cost. Okay, tiny expenses. It may be ignored to record in the accounts book, but purchases of a machine 5 lakh rupees is carefully recorded in the notebooks. It affect the production and the expenses. Are you clear? So these are the 5 important principles of cost accounting we discussed clearly. Let's come to cost accounting versus financial accounting. Okay. First one is objectives. What is the main objective? Cost accounting. What is the main objective of a cost accounting? To control the cost, to know the cost of the production. Say for example, in a furniture manufacturing company, what is the cost of production for one chair? The cost of the production of one chair is 2,000 rupees. It is the main objective for the cost accounting. What is the main objective for the financial accounting? The financial accounting's main objective is to find out, focuses on or find out the profit and loss of the company or businesses. The profit of the businesses is 3 lakh rupees. Okay, that is its main objective. Let's come to legal requirements. The cost accounting need not record all the cost. It is not compulsory. Cost accounting recording is not compulsory. Say for example, in in small bakery need not record detailed cost accountings. It is not compulsory. But whereas it take the financial accounting, it should be recorded all the transactions. It should be prepared trading account, profit and loss account and the balance sheet. So financial accounting, recording financial accounting is very important. Recording cost accounting is not compulsory. Okay. So recording financial accounting is compulsory. Recording cost accounting is not compulsory. Okay. Legally is not required for cost accounting. Financial accounting is legally required. Okay. It's prepared trading account, profit and loss account and balance sheet. It's legally required. Then come to classification of transactions. Let's take cost accounting transactions are classified according to elements of cost studies: material cost, labor cost, overhead cost. Okay, let's come to financial accounting. Financial accounting's transactions are classified with their accounts. What are the accounts? It has a financial account, has a purchases account, sales account, income and expenditure account, right? Profit and loss account, assets and liabilities account. Okay, so let's come to stock valuation. Let's take the cost accounting stock valuation. How the cost accounting value the stock. Say for example, a company has 100 notebooks remaining. Okay, each notebook cost is 50 rupees. Okay, what is the 100 note? How much cost for 100 notes? 5,000 rupees. 100 into 50, 5,000 rupees. Okay, the cost accounting stock valuation record 5,000 rupees cost price. The notebook cost price is for 5,000 rupees. So cost accounting always enters the cost price. The valuation of the stock is 5,000 rupees is recorded. Let's come to financial accounting. How can financial accounting stock valuation is calculated? It's a stock valuation, whether it is a cost accounting or marketing accounting, which is lower cost. That only lower cost only recorded in the financial accounting. I will explain you with example. The cost price of the note is 5,000 rupees. Market price of the notebook is 4,500 rupees. Listen carefully. What is the cost price of the notebook? 5,000 rupees. What is the market price of the notebook? 4,500 rupees. In both the price, which price is lower? Cost price or market price? Market price is the lower. So the financial accounting records always a lower price. So the financial accounting records notebook value, stock value is 4,500. So in stock valuation, cost accounting follows the cost price. Financial accounting always follows the lower price. Okay, let's come to analysis of the profit and the cost. Let's take the cost accounting analysis. Is it enters a company records a separate cost, material cost 30,000. Say for example, how it cost and profits are analysis in cost accounting. Say for example, in a furniture manufacturing company, it manufactures a chair. Okay, it's a material cost 20,000 rupees. It's a labor cost take 10,000 rupees, and it's other expenses 5,000 rupees. So total cost of the production is 35,000 rupees. Its selling price, it fixes according to this cost data, it fixes its selling price 50,000 rupees. So what is its profit? 15,000 rupees profit. So it fixes separately. Cost accounting fixes separate cost and separate selling price and profit separately. Okay, in analytical method. Okay. Let's move to financial accounting. Financial accounting gives total profit of the company 5 lakh rupees every year. That's all, not separately. Okay, let's come to accounting period. Accounting period. Let's take the cost accounting period is very shortly. Cost sheets prepares records daily, weekly, monthly. The management requires the cost sheet for every week to find out, to know the cost of the production, to find where is the wastage is going on. Okay, to find out the wastage and control the cost only. The management always frequently requires the cost sheet, cost report. Whereas take accounting period for financial accounting. Financial accounting prepares the financial account every once in a year. That is called, it is called financial accounting period, financial accounting year. Why? Because it prepares once in a year. Financial accounting prepares once in a year. Cost accounting prepares daily, weekly, monthly. Okay, let's come to emphasis. Emphasis means which area it focuses. Okay, cost accounting only focuses on reduction of the cost. In financial accounting only focuses on reduction of the cost accounting. What I said, cost accounting focus on reduction of the cost, where it is reduce why labor cost increases. Okay, so analytical in procedure. Okay, so let's take the financial accounting. Financial accounting only focuses on profit and loss account. Prepare the profit and loss account and balance sheet. Through the balance sheet, profit and loss account, provide whether the company gets a profit or loss. Financial position. It shows financial accounting always shows the financial position. Okay, then nature. The cost accounting nature is what? Analytical in nature. Okay, why the cost of production is increases. Last month's why the last month's cost of production increases. It's analytical in nature. Let's take the financial accounting. Financial accounting nature is historical in nature. It records all the transactions in past transactions. Okay. So these eight topics are related to cost accounting and financial accounting. We discussed in detail. Do you have any doubt? Please comment it in the comment box. Let's come to cost accounting and management accounting. Difference between cost accounting and management accounting. First one, what is the meaning of cost accounting? Cost accounting meaning is nothing but with recording, classifying, analyzing, cost, controlling the cost and take the management necessary steps to reduce the cost. That is called cost accounting. Already said so many examples related to cost accounting. Cost accounting to take a manufacturing furniture manufacturing company to know how much production cost is spent to produce one chair, 2,000 rupees or 1,000 rupees. Okay, in this way the cost accounting are prepared. What is the meaning of management accounting? Management accounting helps to management to take the necessary decisions. Okay, to open, it helps to management accounting helps to open the new branch. Okay, so then comes to objective. What is the main objective? The main objectives of the cost accounting is to control the cost, reduce the cost. Okay, why the salary, that means labor cost is increases, how it could be reduced, cost of the labor, how could be reduced. So same main objectives for the cost accounting. Let's come to management accounting. What is the main objectives for the management accounting? It helps to management to planning and the policy decisions, planning the future production plans. Then come to scope. What cost accounting has the limited scopes. Only have the cost data only. It can studies for what are the three elements. What are the elements? It has only material, raw material, labor and overhead. Okay, so the limited scope, the scope of the cost accounting is very limited, and the scope of the management accounting is wider. Cost accounting, it has cost accounting data, financial accounting data and the statistical data and the data used. Let's take the cost accounting data is using mainly cost data, electricity expenses report. And let's take the management. It uses the cost data, financial data and statistical data, sales growth report and the cost report and the marketing analysis. Let's come to focuses. The cost accounting focuses on reducing the cost and control the cost. Okay, so how to reduce the production cost? Let's take the management. Management only focuses on making the decision of the management, deciding product selling. Let's come to nature. So cost accounting nature is analytical in nature. How the analytical nature means how the why the production cost is increases, in where more cost is spent, how could it be reduced. So cost accounting always in analytical in nature. Let's come to management. Management, nature of the management is advising in nature. Management advises to install the automated machine to produce a product. Okay, then users, who are the users for cost accounting? Cost accountant and factory managers uses the cost accounting. Let's take the management accounting. Who are the users? Top level management. Let's take the CEO. Okay, expansion of the plan. Okay, to expansion of the plan and time orientation. So cost accounting helps the mainly cost accounting concerns mainly with the present and the past cost. Example, analyzes a last month production expenses. Let's take the management accounting concerning mainly with future planning. So prepares the next expansion budget. Okay, so from this in this video we are discussing in detail about 4 important terms of the cost accounting. That means cost, costing, cost accounting and cost accountancy, and we are discussing detail about nature of the cost accounting, important nature of the cost accounting, and the important scope of the cost accounting, and the principles of the cost accounting, and what are the difference between, we have that 8 difference between cost accounting and financial accounting, and 8 difference between cost accounting and management accounting. Do you have any doubt? Please comment it into the comment box. Thank you. Take care.